90% credit scores are used to determine if a lender is going to lend you money or they're not going to lend you money. It's going to be up to them. All right? So there's a very good barometer of how your credit can look to potential lenders. Scoring ranges are just one of the tools lenders can use to link ranges of values which associated with characteristics and metrics at a glance, allowing them to make more informed lending decisions fairly and quickly. Once they pull that credit score up, it's a big picture of who you are. There it is. So it's very, very important. You don't just have one credit score. You have many, and they change constantly. What I tell you, you're going to have 3 different scores. You got Equifax, you got Experian, and you got TransUnion. All right. The scores often used in lending decisions were induced by Fair Isaac Corporation more than 25 years ago, and are known as FICO scores. And they have a Vantage score now as well, developed by the 3 major credit bureaus and introduced in 2006. So all these things you need to be aware of, all right? Even the same credit score has different versions, which we talked about. We talked about that in the 3 credit bureaus that they're going to report differently. So I don't want you to get upset that you say, well, why is this 600 and this is 590 or 560, 570? There's a reason, but don't get upset. All right, don't get upset. If you're basically in a good range and you're good lender, it's not gonna fall off much. Maybe 5 points. Maybe 6 points, somewhere in there, 7, maybe 10. I don't think it's going to go that high. It's not going to be that different. It ain't going to be that much. All right? All right. What is the range for the credit scores? We just talked about it. Let's go over that real quickly. When you track your credit score, you'll probably want to find out how you compare and what is a good credit score. That's a good answer. What is a good credit score? Get your credit score. The most commonly used credit scoring models have a range of 300 to 850. All right, now you want 300, you can forget about it. You ain't getting nothing. You ain't getting nothing. Don't even look that way. All right. Each lender sets its own standard for what constitutes a good score, but in general, scores fall along the following lines: 300 to 629 is bad credit. Bad. You're not gonna really get anything. You get something. If you get something, you're gonna be paying astronomical interest rates. If you get something, they consider that bad credit. You are a bad risk. All right. 630 to 689. 630 to 689, they say that's fair credit. Also called average. You're average. Well, you're on the borderline. So you're not going to get the best rates. You're not going to get the worst rate, but you're going to be right in between. You may get, instead of paying 24% or 25%, you may not pay that, but you may pay 18%. You see what I'm saying? That's it. So you're gonna pay a little bit less, but it's gonna be still a little high. All right. 690 to 719 is called good credit. 690 to 719 is called good credit, and then 720 up is called excellent credit. I'm in the excellent field. Mine is right now 76. I got 3. I got 760. Like I said, this is what it costs, so it fluctuated. You see what I'm saying? On one, I got 766. The other one, I got 756. And the other one, I think it's 740 something. But that's going to all change because that once the bureaus, other bureaus, because sometimes it may take a month or so before some of the bureaus report some of your lenders report that to the credit bureau, and maybe 30 days, maybe 45 days, and see once that starts flowing in, then you'll see your score start gradually going up as they get a constant trend on going up. Because see, right now I don't have no feedback on my American Express card yet, even though I just got it. I used it twice, but it's nothing coming in. And then also, since I got a $6,500 credit limit on that American Express card, that when you get an increased amount of money on your credit line, that will also push up your credit score a little bit more as well. And I haven't got there yet because it hasn't been reported yet. But all those things change. So that's why I say your score will fluctuate between the 3 because everybody's not going to report to the same bureau because everybody have their own standards on how they judge the credit score. All right. All right. Even if your score is in the low 500s, you may still be able to get credit. Like I said. I had it. I had a 520. I was able to get a car, but my percentage rate was like 18, almost 19% when I got the Camry. But it will come with very high interest rates or with specific conditions such as depositing money to get a secure credit card. Sometimes it may happen. Sometimes it may happen. If you want to get a credit card, you may have to put some money up front and then manage that money. It's just like a debit card. You can't spend no more money than what's on that card at that particular time. All right? Until you deposit more money and use it that way. All right? You may have to pay more for car insurance, which is true, or put down deposits on utilities. That's true. You go rent an apartment. They're going to look at your credit score. They're going to pull up, well, you got to pay $200 or $300 deposit. Credit score. Credit score. Very, very important. All right? But as you add points to your score, you'll have access to more credit products. That's right. Because people see, man, I tell you, I get so many credit offers now, things come to the mail all the time. You know what I do? I tear that mess up and throw it in the garbage can. Don't solicit to me. I'm going to determine when I'm going to get the credit and what credit is good for me. And I'm going to manage it. Like I said, I don't need no more than the cards I have in my pocket. Now, I may get one store card, but I'm going to get a store card that's going to benefit me maybe next year. And that's going to be it. I don't need no more cards. That's it. I don't need it. Or I may get my credit union card. I may get that. I don't know. It's going to be one or the other. Or I may get both, but that's it. I don't need it. All right? So don't be seduced by these offers. All right? All right, let's continue. You have access to more credit and pay less as you use them. That's right. The more you use them, the more advantage you get, the more your credit score is going to graduate and go up higher. All right? At the other end of the scale, borrowers with scores above 750, or so have many options, including the ability to qualify for 0% finances, which I had when I went to buy that car. I didn't have to pay no money up front at all. Interest on credit cards as well. You got a good credit score, no interest for so long, bam, 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 bam. That's how. And then, all these options open up to you as your credit score gets better. All right. The important thing is to use the same score every time you check. Do it. Otherwise, it's like trying to monitor your weight on different scales. You can't do it because it's going to fluctuate up and down. Or possibly switching between pounds and kilograms. Some scores may be using a different scale entirely. Citibank, for example, gives some of its credit card customers access to next-gen FICO scores, which are on a 250 to 950 scale. You see what I'm saying? So everybody is different. But if you're in a range, you see, like I said before, if you're in a good range between 690 to 719, you're doing very good. That should be your goal. All right? Lenders look at more than credit scores. When you go to borrow money, a good credit score does not guarantee a good interest rate or even approval. Not necessarily. Credit scores look at your reported credit history to gauge the likelihood that you will repay money on time, paying your bills on time. You could be deep in debt and still have great credit scores if you have paid all your bills, on time. On time. They look at that. Very, very important. I said 35% of your credit score depends on paying your bills on time. All right? By your credit report. But your credit report doesn't reflect whether you can afford to repay the credit you are applying for. That's why your income, that's where your income comes in. How much money you got coming in. Don't spread yourself too thin. If you can't afford it, why are you going in there for it? Because if your income cannot back up the purchase that you're trying to purchase, then they're not going to give you the score, even though you may have good credit. But you don't have the income to back it up, to pay the note. You see what I'm saying? Income and other debts play a key factor in some lending decision, as lenders consider what you owe alongside what you earn and set assets that you have accumulated. All right, and then lastly, let's end this out. We're gonna cut it down. We got through this. Praise be to God. Hallelujah. All right, credit scores, credit score range definitions. We're gonna look at this. All right, and we're gonna break it down on this. 800 plus. If you're in the 800 club, you are there. You arrived. My goal. Within, let's see, what is this? Within the next year or so, I want to be in the 800 club. I want to be in the 800 club by next year. I'm going to set a goal for myself. This is February. A year from now, I want to set a goal to be in the 800 club. You can set those goals. You can set them, and you can make them if you get your budget down, write it down, stay within your means, pay your bills on time. Set yourself a goal and look at it and monitor it, and you can get to it. I remember I set a goal for 766 about a year ago, and I hit that goal within 4 months. I was at 760. So 800 I'm reaching the sky for 800 club next in a year's time. 800. That's what I'm shooting for. All right. 800 plus indicates an exceptional FICO score and is well above the average score. Consumers in this range may experience an easy approval process when applying for new credit. Approximately 1% of consumers with a score of 800 plus are likely to become seriously delinquent in the future. 1%. Why? Because 9 times they got a good job, they got good income coming in, and they're going to pay their bills on time. All right. 740 to 799. That's where I'm at right now. That's where I'm at right now. Indicates a very good FICO score and is above the average score. That's where I'm at. Consumers in this range may qualify for better interest rates from lenders, approximately 2%. Approximately 2%. Consumers with a credit score between 774 and 799 are likely to become seriously delinquent in the future. Why is that? Because they have learned over time how to manage their money. They learn how to buy things, not to buy things that they don't need at the time when they want them. They put it off because it's not important at that time. All right? And they learn how to manage and budget their money. There it is. So they're not likely to go into default because they know what they got coming in. They have backup money to make sure they have that money. They put it on the credit card. They're able to pay that bill. When that bill comes in the mail, they're able to pay it off, write that check, pay the bill. Now nowadays you can pay everything online, pay your bill. That's what I do. Soon as I see that due date, soon as I see that, even though I discharge something on the card within the last 2-3 weeks, the amount is on the statement on the TV, on the statement. Online, but it has not got a due date because they generate the bill in a billing cycle. All right, so they have not posted it yet. But as soon as they post it, within a day or two, bam, I'm paying that bill off. You see what I'm saying? Keeping on top of things. All right, 760 to 739 indicates a good FICO score and is in the middle. In the median credit score range, which is average. All right, you're average. All right, consumers in this range are considered an acceptable borrower, but you may get a little bit high. You may get a little bit higher interest rate. All right, because you're acceptable. Approximately 8%. Look, you see how it went up. See how it went up? 8% of consumers with a credit score between 670 and 79 are likely to become seriously delinquent in the future. 8%. It goes up. All right. 580 to 699, the 669 indicates a fair FICO score and is below the average credit score. Consumers in this range are considered subprime borrowers, and getting credit may be difficult with interest rates that are likely to be much higher. You're going to pay for your delinquency and not paying your bills. All right? You're going to pay dearly if you get the credit. All right? A credit's approximately 28%. Look how high it has jumped from being a good credit score between 670 and 739 to down to 580 to 669. 28%. That's a 20% jump. All right, of consumers with a credit score between 580 and 699 are likely to become seriously delinquent in the future. And then lastly, 579 and lower indicates a poor FICO score and is considered to be poor credit. That means your name is mud. It's mud. All right. Consumers may be rejected for credit. Credit card applicants in this range may require a fee or a deposit. You got to put you got to put money on it, like a card. Get a secure credit card and put the money on it, because they're not going to trust you with giving you any line of credit because you're not dependable. You're not trustworthy. All right. Utilities may require a deposit. That's true. If you rent an apartment, they're going to ask for a deposit. That's right. A credit score this low could be a result from bankruptcy. Yes, it could. Or major credit card problems. It could be health. It could be a health reason. Now, it may not be all your fault either. All right, for it to be that low, because you may have had medical issues going on, had paid bills, and got in debt. Sometimes those things happen, and you just have to start from the beginning, write you out a budget, what's coming in, and start paying those bills off, and use the snowball method of paying off your bills the way I showed you how I did it, and you can get out of it. It may take a little time, but you can do it. All right. Approximately 61% of consumers with a credit score under 579 are likely to become seriously delinquent in the future. 61%. And then lastly, other factors to consider about your credit, your overall credit. Your FICO score is one part of what a lender considers when judging credit worthiness. 2, your FICO score does not factor in income, length of employment, alimony or child support payments, and other things that lenders will typically consider. They want to know all this information because they want to make sure that you have the means to pay off the note. And that's their right because they're lending you their money. All right? It's within their right to do that. All right? Number 3, having little payment history or having only new credit can result in a lower FICO score. It is not always from missed payments or maxed out credit cards. If you don't have no credit, it's going to be, you have no score. You have a low score because you haven't built no credit yet. You haven't built it. You got to build it. You got to build it. It takes time to do that. How credit scores are calculated. Now, I just told you that. I'll say it one more time. This is very, very important. We're going to end on this note. 35% depends on your payment history. Number 1. If you pay your bills on time, you can guarantee that your credit score will get better and better and better over time. Pay your bills on time. Number 1. Number 2, amount owed on your credit card in a debt. That's 30%. That's number 2. How much do you owe? Don't go over. What did I tell you? Between 10 to 30%. They give you 30%. I say 25% of your total amount of credit line that you have. Don't go over 25% of that. That's your credit utilization. Once you start going above that, then your credit score is going to start to decrease. It's going to get worse. All right. 15%, the length of each credit card or revolving credit that you have. How long have you had to open an account? Very important. Like I said, keep the credit card. If you got too many, tear some of them up. Yeah. Like I said, you may only need 2 or 3 cards. 4 cards the most. Your major cards you need. And the rest of stuff you'll need. But leave the accounts open. Even if you don't use it that often, charge something here and there, pay it off, and keep it active. All right. 10% new credit. All right. Keep that low because the more you apply for credit cards, all right, those are hard inquiries on your credit, and that'll make your score drop as well. All right. That means that's giving an indicator to the lender that you are hungry for credit. You want to buy things. All right. So you want to keep that as low as possible. And then lastly, 10% a type of credit used. What I tell you before about credit mix, you need to have a good credit mix on your credit report, and we'll say that, and we'll end it out on this. The credit mix is what? Retail accounts, Macy's, Sears, what are the major stores around? Nordstrom, Lord & Taylor, Bamberger's. Y'all don't even know about Bamberger's. That's back in my time. Allbacks, these are, but you understand what I'm saying. Credit cards, Visa, Master, Discover, American Express. Installment loans, could be a car loan. Any other installments that you're paying up, could be a furniture store, things of that nature. You may have installment loans on. Signature loans, that means like a car note, or things of that nature. That's a good mix. And also your mortgage, if you have a house. All right. That's it. I hope that you have enjoyed this. We may, and this depends on how the Lord speaks to me. I was thinking about next week dealing with savings and investment, but I may hold that off and do that later. That may be something I may deal with as I get deeper more into investing and savings and learning more about that. I may do that. So maybe next week we'll go into a new series of messages, or next week we're asking God for your prayers. Continue to pray for us and lift us up as we continue to bring you power-packed messages that will impact your life. Men, I'm basically talking to you men, because whatever you do affects the family around you. All right. Well, we thank you so very much for tuning in to the broadcast today. We hope that you have a great weekend. Praise be to God. It looks like we're going to have beautiful weather up and down the East Coast. I think maybe be some rain here and there, but the winter has been very mild thus far. We hope that you enjoy your time with your family and your friends. Be careful out there. Enjoy yourself. And we hopefully look forward to seeing you next time here, next week, same time. As the old thing you say, same time, same back channel. Praise be to God. I was a big Batman fan. Praise be to God. Hallelujah. When I was growing up. We look forward to seeing you then. As the brothers would always say, it's not what happens to you that matters. It's how you react to things that happens to you that really matters. Finally, the secret is out. Even strong men struggle. Praise be to God. We love you, and we look forward to seeing you next time here on the Trauma Net for Men. God bless.